Hi everyone, I'm a 38-year-old regular Singaporean working a 9 to 6 job in the tech industry. In this channel, I document my journey towards a Fat Fire goal of $4.5 million portfolio by age 50 in 12 years' time. The portfolio sits at 551k so far, with 226k in net profits, and has outperformed the S&P 500 over the last 5 years. Now, there's been a lot of recent market volatility, especially given that I run a concentrated portfolio of a few high conviction names. But compared to the Trump Liberation Day back in March, where my portfolio declined over 20 plus percent, the recent dip is just another day at the office for me. Remember that portfolios never move in a straight line. Even Berkshire Hathaway experienced 50% drops 3 times in its history. So if you're into long-term investing, you have to be comfortable with all this short-term volatility. Now today's episode is about why I just deployed 26,000 Sing dollars or 20k USD into one specific company last week. And this is the largest capital injection I made in the last 2 years, and it was only possible because of current market opportunities. I'll explain my full thesis behind this move in an easy to understand manner that even a swaku Singaporean can understand, using anecdotes from my actual work in technology. And then throughout this episode, I will reference a newsletter I sent to subscribers of contraturtle.com last week. Now, I put a link in the YouTube description below, so you can go and take your time and read my investment thesis behind this $26,000 move in detail. And then once you're there, feel free to click this black button at the top right to subscribe. Remember to check your spam inbox. Sometimes I don't know why GPO doesn't like turtles. Anyway, let's move on. The company that I just fired 26k into last week, where I've indicated on this chart, is none other than Meta. After they reported Q3 earnings, the share price fell 25% below the 52-week high. This was only the 4th time in the past 5 years that Meta's share price has dipped below the 200-day simple moving average that you can see here on this chart in blue. The first time was the pandemic, and then we had the 2022 crash, and then most recently, the Trump Liberation Day crash. Now, I don't know if I bought at the bottom. Nobody can consistently pick the bottom or predict any form of short-term price movements. Confucius always says, those who try to pick the bottom will get smelly finger. But at the price that I got Meta for, based on my own valuation, I am happy and willing to wait long-term for my thesis to play out. I will be watching the price movement in the next few weeks and months, and have additional plans in store depending on what happens. So this is also detailed in the newsletter article I wrote in the link below. Now, one of the main reasons behind this recent dip in Meta was that management said that CapEx will grow much larger next year going into 2026. So everyone thinks it's going to be a repeat of this 2022 Reality Labs cash burn all over again. And then a lot of bears started coming out, like this tweet here on the left, talking about Zuckerberg overspending cash again. Now, I have a pretty contrarian view to all this analyst sentiment, and I think that these analysts are incorrect this time, which is why I fired this massive shot. I will explain my analysis of how I believe conditions today are very different from conditions in 2022 for Meta. If we rewind back in time, there were 3 things that were affecting Meta's stock back in 2022. Now, the first one is what we call Apple ATT, which is short for App Tracking Transparency. And the second was TikTok's rise. And finally, the third one is Reality Labs' cash burn issue. Now let's start with this Apple's ATT rule. Now, around that time, Tim Cook, the CEO of Apple, released the iOS 14.5 update, allowing iPhone users to choose whether or not they want to share their data with apps. So this prompt here on the right, should be very familiar to all of us iPhone users, including myself. I use an iPhone. Every time you try to install any new app, like this prompt here, it will appear. This thing right here, on the right hand side, this prompt is actually ATT. It's just that simple. It's just asking you whether you allow this new app that you just installed to track your activities on the phone or not. That's ATT. It's really just as simple as that. And actually, I think this ATT thing is damn stupid. I mean, how many of you will actually click allow tracking? Confirm majority of people will click ask M not to track when given a choice, who will bodo go and click allow, I mean, most people I know will click don't track. It's just, your human nature, you want more privacy, And so, when a user clicks the not to track option, Facebook and Instagram, back in 2022, after Apple pushed out this ATT thing, Facebook and Meta, Instagram, these apps weren't able to track that you were, for example, maybe you are Googling something about turtles, somewhere else. So Facebook and Instagram couldn't tell because not you disallowed them to track. And so when you came back to Instagram, right, they weren't able to properly target you and show you turtle ads based on activity you did before, because Apple ATT, after Tim Cook launched it, was blocking the tracking from apps, right? And this was a big problem, of course, because ineffective ad targeting meant that advertisers back then, right, would pull back on ad spend and Facebook's revenues would fall. So when ATT was released, right, I tell you all anecdotally, I was actually working, right, at an advertising tech company. And so I personally saw firsthand, right, how ATT was disrupting advertisers' confidence. There was a lot of fear and pessimism on the ground. So it was actually very real. Advertisers wasn't very sure if they should advertise into Facebook or Instagram, right? Because of all these targeting issues. And then at the same time, not only ATT was hitting Meta stock, TikTok, if you guys remember 2-3 years back, was exploding in growth and challenging Instagram. And so, right, if you just look at Meta's year-on-year revenue growth, right, this part that I've circled, right, Meta experienced a very steep decline as a result of ATT and then also TikTok starting to eat some of Meta's market share. And then we also had this huge pullback because remember, right, before 2022, we had the pandemic. So during the pandemic, right, the e-commerce activity was insane, Everyone was buying stuff online because everybody bored as hell at home, right? Nothing to do, right? So what happens when you got a lot of e-commerce activity? A lot of these e-commerce merchants, they are more than willing to fork out money to spend on advertising. So that's why there's this huge spike before this red circle to the left. But obviously, as the pandemic recovered, everything went back to went back to normal. Everyone started going to work, staying less at home. E-commerce started to normalize. Then we had this pullback effect into the normalized revenue. So that's why we see this huge dip. So it was a combination of ATT, TikTok, and this normalization that sort of resulted in this revenue year-on-year crash growth in Meta. Now, the TikTok threat, right, was so scary, right, during 2022, right, that at the earnings conference, when an analyst was asking management, right, Meta management, right, whether TikTok was taking market share from Instagram, right, the CFO actually evaded the question, If you just look at this part here, I pasted this David Werner, I better pronounce his name properly, I almost say Wiener. David Werner, right, he evaded the question. You see this part I highlight in black. Right, they asked him, what do you think about, maybe you are losing market share to TikTok. And then he says, I don't think I have anything on that front to add or to say. Yeah, so anyway, this was quite telling. And then in the next few weeks, right, Meta stock fell even more after this conference because everyone felt that TikTok had Meta on the defensive. And finally, we come to that third factor, which resulted in the 2022 decline, which is reality lapse. Now, I don't know if you all recall, but after the pandemic, right, or even during it, right, Zuckerberg started getting all these weird ideas of pivoting to the metaverse because everyone was stuck at home, right, nothing to do, right? And so he pivoted and even changed the company's name from Facebook to Meta. Once upon a time, it was ticker symbol Facebook, right? And then he started investing a lot of this capex into reality labs to achieve this vision of the metaverse. And so, of course, this was seen by investors as a signal that Zuckerberg had lost confidence in the core advertising business because of what happened with ATT and TikTok. And so analysts just felt that the Reality Labs cash earn was unjustified and sent the stock down nearly 80%. And so it was a combination of all these three factors that resulted in this incredible pessimism in the stock back in 2022. So where are we today? Now, instead of just listening to all the doom and gloom news that we're hearing in the market, maybe related to Meta in the last 1 to 2 weeks, right? We must always remember to ground ourselves in the fundamentals and look at the numbers before we make a conclusion. Now, this is a chart that shows Meta's share of the digital advertising market since 2021. You can also click on the link below the article inside. I put this chart out there. Okay, I want you to focus on the two red parts I have highlighted. The first, right, is that the top one, right, is that from 2022 until today, right, Meta's advertising market share actually increased from 28.6% to 33.3%. That's the first point. So it didn't decrease, it actually increased after 2022. The second point is that for the last 11 consecutive quarters, one quarter is 3 months. Okay, so 3 times 11, that's 33 months already. Right, that's nearly 3 years. For the last nearly 3 years, Meta had the highest incremental market share gain out of all digital advertisers. all, even higher than Google. I shit you not. Look at the red box at the bottom. Okay, so every quarter, right, the red box at the bottom, right, highlighted, right, is how much incremental, the keyword here is incremental, means every quarter come about, all the hyperscalers report their earnings, and then Meta reports their how much extra incremental market share they gain versus Google versus all the others. For the last 11 quarters, Meta gained the highest incremental market share out of all hyperscalers that are doing advertising. All. Okay? So then you might think, how is this possible? Didn't the Apple ATT that we talked about just now, the app tracking transparency, that cop blocker thing, stop Meta's ability to target all of us Instagram users more accurately? How come they still managed to pull through in the last 2-3 years like this? So how did they overcome that problem that blocked all this tracking? The answer is that they actually developed a probability guessing machine that could tell what ads are most suitable to the user, even in spite of Apple ATT blocking Meta. So even if you and me, right, we click the stupid ATT shit, right, that keeps popping out, right, every time it asks us when we install the app, right, it doesn't matter because Meta created this probability machine that can guess exactly what are the kind of ads you want, right? It sounds very scary. I mean, if you look at the Instagram ads nowadays, right, can you guys tell me really anecdotally, right, don't you find it's quite uncanny that a lot of the ads that are being shown to us on Instagram nowadays, right, are even more relevant than they were a few years ago before ATT, you know? I don't know if you guys feel like that, you know. I feel like this, right? So this is the probabilistic guessing machine at play, right? Obviously, I simplified a lot of these technical terms into this, probability guesser machine. But at its core essence, that's what it really is. It's just a guessing game, and it's guessing damn well of what kind of ads we want to be shown. And there's one more thing. Remember about TikTok, right? I mentioned, which is that 3 years later, after that conference call where the Meta CFO, right, he was very nervous, right? The Michael Wiener guy, right? He was very nervous about TikTok, right? Today, Instagram has grown to 3 billion monthly active users. While TikTok, despite all the pessimism back in 2022, right, challenging the market share or whatever, is now only at 1.8 billion monthly active users. And the gap is widening. And more impressively, apart from the users, remember, always ground at the numbers. Don't listen to all these Michael Bublé stuff. I'll talk about it shortly. Okay, look at the numbers. Just look at the fundamentals. In the last 3 years since 2022, this is Instagram Reels annual revenues. They grew from $1 billion per year in revenue to $50 billion just reported in this Q3. The same Q3 that sent the stock down. That's a 50x growth in revenues in this Instagram Reels product, guys. In 3 years, 50x. So, right, the past 3 years has proven to us, right, very fundamentally at the numbers. Don't listen to all the hype and whatever nonsense. Okay, just look at the numbers. The past three years, right, has just proven that Instagram managed to fight back and more than reclaim market share from TikTok and also overcome the ATT issues, contrary to what analysts were afraid of back in 2022. Now, there's one more thing I want to share with you guys, which is quite interesting, which is called GPU fungibility. Now, this sounds like a damn technical term, but I'm going to break it down so it's super easy for you to understand. Basically, right, we all know that Meta, right, is buying a lot of these NVIDIA GPU chips, right? A lot of these capex they're investing, right? Which is why people are so scared, right? Capex. With all these NVIDIA GPU chips, right? Actually, right now, today, right, Zuckerberg constantly has two choices that he can decide. He can either continue to dump the GPUs to train the AI llama models, which is obviously burning a lot of money to get ahead in the AI race, or he can use the same GPUs that he's investing in capex to power Instagram and Facebook's ad recommendation system. So like the guessing machine and all that. Things that help to improve recommendation of ads to users like us, which has proven to be a huge money maker as I've just explained. Now, if you think about it, back in 2022, right, Zuckerberg did not have this similar backup option because of ATT. At that time, right, when ATT first came out, right, Apple ATT, right, to block all this tracking ad stuff, right, the probability ad guessing machine, right, was still not yet proven. It was still in its infancy. But today, because he has this proven backup option of being able to crank out a lot of cash from Instagram and Facebook, he can easily redeploy any GPU capex to these proven profitable Instagram, Facebook products. Even if it turns out worst case scenario, that the AI super intelligence race takes much longer than he anticipated to reach. And so I hope this explanation answers Michael Burry's skepticism of underreporting depreciation in capex. Because the shelf life of GPUs within Meta is actually long, given this flexibility to redeploy older GPUs into Instagram and Facebook recommendation systems after they are used initially for training AI models that require newer GPUs, right? So today, if Meta goes on to buy a couple of new NVIDIA Blackwell GPUs, right? The very latest ones. I don't even know what the latest ones are. I think they're Blackwells, right? I'm sure you guys are semicon experts out there can answer this, but the whole point is, today they go and buy this whole new bunch of Blackwells, right? Tomorrow or a few years down the road, when they realize, oh no, now these Blackwells, we cannot use it to train our latest AI models. The latest AI models of Llama even better at GPUs. Never mind. They can redeploy these GPUs that are now older into their recommendation system to juice up the recommendation system and make more money through Instagram and Facebook. So that is the idea of fungibility. When you say GPUs are fungible, we're just basically saying they are flexible to be redeployed around. Okay. And then I don't know why people are listening to this Michael Burry guy. He's been wrong 12 times before with all his bearish calls. And so just because he's right that one time in 2008, right? Honestly, his track record is really not that great. Now, the final piece of the puzzle that makes me think in a contrarian way that Meta today is unlikely to experience, I say unlikely, never say never, unlikely to experience a similar disaster as 2022, is that Susan Lee, who is now the current new CFO, she actually admitted on a recent podcast. I watched this podcast. I recommend you guys go watch. It's hosted by the Stripe founder, one of the Collision brothers. Right, just go YouTube this Susan Lee podcast. Okay, it's called A Pint in the Bar or something. I don't know why this Stripe CEO he got so much time. Every week he's doing a podcast. Stripe must be doing not very well. But anyway, I sidetrack. Anyway, on this podcast, right, just a couple of months ago only, right, Susan Lee, right, the CFO of Meta, right, she admitted on this podcast that they made a mistake back then in 2022. And they now know that they need investors buy-in along the way, instead of just throwing capex at a vision that is too far away with an unknown ROI. Which means Zuckerberg's statement, right, in the Q3 earnings call that he just made, right, his statement that next year, right, will increase capex by a lot, right, I don't think it's suka say one leh, right, because they really kena burn before, and Susan Lee admits here and during the podcast, and they know that they cannot repeat the same style of capex like in 2022 without any backup plans. Because don't forget, Zuckerberg's net worth is $209 billion according to Forbes' latest estimates. And he owns $204.5 billion worth of Meta shares. So that equates to about 98% of his own personal net worth invested in Meta, That's actually quite insane. I don't know of any CEO that has this much personal net worth invested in the company he's running. Not even Jeff Bezos. I think Jeff Bezos is 80-something percent. Or Elon Musk, right? Elon Musk is not even 20-something percent. That's why he fought so hard for the $1 trillion package. Because if he delivers, right, Musk will own, I think, 25%, if I'm not wrong. Which means, anyway, coming back to Zuckerberg, which means, right, if the stock price of Meta dies, right, he will die with the shareholder, right? So, I mean, we can ignore all the analysis I've done up to this point, all the GPU fungibility, ATT, whatever nonsense, right? But, right, one thing that's a bit hard to ignore, in my opinion, right, is the long-term personal incentive or skin in the game that this guy has with Meta. It's like 98%. Oh, sorry, I didn't put out the calculation. It's 98% of his personal net worth. Anyway, to end it off, I'll be watching the stock price quite closely in the next couple of days or a couple of weeks. And then depending on the price action and how it behaves, I do have some additional action plans I've lined up. And for those of you who are already premium tier subscribers of the Contra Turtle website, you can stay tuned for an update from me. If I make any moves in the coming weeks, I will share transparently and send it through email notifications to all premium members, along with an explanation of my thought process and analysis. Premium tier members will also get access to my own watch list of companies that I'm paying attention to, as well as my valuation buy levels. Now, I must stress very strongly, all my sharing here today, or on my newsletter website, is not financial advice. What I'm really doing here is I'm willing to show you all transparently a journal record of my own actions. So I cannot decide for you all what you should or you shouldn't do, because I keep seeing in the comments, people ask me, hey, should I buy at this X dollar level or whatever dollar amount for this particular stock? All these questions are, well, after I released the Tencent episode that day, oh my god, man, I got flooded with DMs asking me, can I buy this, can I buy that? All these DMs are, yeah, I cannot give this kind of 100% advice. I'm just sharing my own thesis. Okay, take what you want to, or reject what you want to with my analysis and my thesis, and then go and do your own additional research on the company to really understand it before you make any investment decision. Okay, there will always be opportunities. Don't rush into something without really understanding what you are doing. Okay, and as Buffett always says, the stock market is a device for transferring money from the impatient to the patient. Now, personally, for myself, for this position and this bazooka that I fired, 26K last week, I am more than happy to wait long term for the market to eventually re-rate Meta above my valuation buy levels, as it has happened with quite a number of my previous buys before. It's just going to be a waiting game. Right? You cannot rush and say, oh my god, I buy today, and then I pick the bottom smelly finger, and then why is it the price still going down? Right? You just got to be patient, guys. Right. Otherwise, I think maybe you're more of a trader than a long-term investor. So I think that's something you really need to distinguish between yourself philosophically, what you really are, right? Your temperament, your investing style, and then what are your goals, what are your time horizon, right? For me, my time horizon is very long. It's like more than 10 years, right? So that's why I'm willing to play the long game. But anyway, thanks for watching, everyone. I hope you guys have a good weekend.